things that I utilize, and this is where like a lot of I would say pro traders, typically people that actually know how to trade, not copy traders who put out wallets and say, "Hey, uh, I'm going to go in the trenches." I'm talking about like people that actually can trade the chart, can trade price action, understand where the highs and lows are, not buying launches and dumping them, and then saying, "Yeah, I'm a trader." That's not what the definition of a trader is. I think a lot of people have watered down the thesis of what a trader can be, what a trader is. And I think that we should get back to the roots of what trading is and how trading works and, all that good stuff. I think it's very important. Um, Here we go with the bots. Love them. Hold on one sec. All right. Muted that one. Yeah. Anyways, let's get into the discussion. We're going to kind of start it out with meme coins. Now, again, I created my own bat testing for meme coins specifically. And I also have bat testing that I utilize for stocks and other crypto as far as fundamental plays and stuff like that too, because those are kind of important, also to a degree, as far as bat testing and being able to know where liquidity lies and where to get entries, where not to, and so on and so forth. So I'm going to kind of run across an array of different meme coins, right? We're going to shoot through many different ones just to kind of talk about, where they are, what they are, kind of how the bat testing worked out, so on and so forth. So this one right here is didn't meet my thesis for bat testing. So what bat testing is coming into a chart, utilizing the tools that are there in front of you, and being able to create the same scenario over and over and over and over again against similar assets. It doesn't necessarily have to be exactly the same. It just has to be somewhat similar. Or in some cases, you can even use the same situation for all assets, right? That's what bat testing is. And the more true it is to all assets or similar assets, the better results you'll get. So basically what that means is like, if I were to come in and say, and here's the thing, you got to set up a rule, right? That's what bat testing is. Bat testing is about setting up rules and following those rules. So if I were to say 86 is always my cutoff for, and that is typically my cutoff for meme coins, 86 to 96 range. If that's typically my cutoff, then that's what I'm typically looking for high structure range where I need to be taking profit. So, and you have to not only find a method that works, and I'm giving you kind of the RSI thought process, because RSI is, in my opinion, is one of the strongest indicators you can utilize. Not only do you have to come up with a thesis of what it can do, you also have to set a time frame, right? So back testing is more than just coming in and saying, "Oh, it's just this and this." So you have to set up a time frame, and it really, the time frame typically should be based around something realistic, right? So I would say if we're looking for trading purposes, in my opinion, I'm going to give you my opinion, right? And everybody's going to have their own. I would say 1 day, 1 week, and 1 month are the strongest trading times you can utilize, right? And since those are your strongest time frames that you can utilize, those are your best time frames to set rules on, right? So we want to set rules on those time frames. We typically don't want to set rules on lower time frames because they may meet the requirement, but then exceed later on, and we miss a good chunk of the play because we're in there trying to play the same rules on lower time frames. Lower time frames are not set up the same as higher time frames. Higher time frames are more solidified time frames, whereas lower time frames are less solidified, right? They're more unpredictable. That's why you want to go with the better predicted markets. So again, we're just going to kind of come in and we're going to say time frames: 1 day, 1 week, 1 month, right? So that's our time frame. So then from there, we want to set up kind of a thesis. What do we want to go by? What tools are we utilizing? Well, for me, I'm using RSI, right? So that's one of my strong points. So since I'm using RSI, I need to find something in the RSI that I can consistently say is true across the board, across every single meme coin. Now, I'm using meme coins as an example right now. We'll get into stocks and other fundamental plays and so on and so forth later, right? So RSI. What is my consistent saying with RSI? No RSI on meme coins will exceed a 96 on the daily, right? Typically, no. So we're going to set rules here. No meme coin will exceed 96 strength on the daily. So I'm setting a rule, right? I'm setting a rule. And so my take profits for because most meme coins, right, don't exceed 86 strength on the daily. So that's most meme coins. Most meme coins don't exceed 86 on the daily. Now these are true back-tested theses, and I'll show you those. But I'm telling you kind of how to create a back-testing thesis yourself, right? So I'm trying to tell you like how you can mentally come up with your own thesis based on your own, tools or indicators that you're utilizing on a daily basis, or even price action, right? Like typically you don't want to go price action because so many people fudge the numbers and fudge the levels, and they like to play different shit. They're not real traders, right? They just try to say, oh yeah, we're going to go to $100 million, $1 billion, all this shit. And like, there's no reality behind that. We want to make money. We're not here to be fugazi, right? Or fugazi by numbers. So we've got a few different rules here. RSI, no meme coin will exceed 96 on strength, right? And this is a true statement. I've backtested this and it's true. Most meme coins won't exceed 86 on the daily as far as strength goes. This is a true statement. I've backtested it. It's true. And I'll show you as we move forward. So I've set 2 rules so far. Now, granted, I'm going to show you how to prove it once we get to that point. I'll show you how to prove it. And that's how you know your backtest works, is through proof. If you lie to yourself and you lie, well, I won't even say lie to yourself. If you'll lie to everyone else, you'll lie to yourself. So don't lie to everyone else. Don't lie to yourself on price action. Stick to what you know is true and stick to that thesis when you're backtesting. All right, so we've set 2 rules with RSI. No meme coin will exceed 96 strength on a daily. Most meme coins don't exceed 86 strength on a daily. And I could tell you so much more that I've learned about meme coins. Like I've learned so much through time and through different types of meme coins and just studying them and paying attention to them. And I'm not telling you to trade meme coins. I'm trying to tell you how to backtest, by the way. So that's the purpose of this discussion. The purpose of this discussion is to discuss backtesting. So don't get it twisted on what I'm saying about meme coins specifically. I just think they're the most consistent. So because they're the most consistent, I'm using those, right? And then we'll get into, more stable things like stocks and, fundamental plays and so on and so forth. And we'll talk about those, and I'll show you backtesting on those also. But these 2 rules apply to meme coins specifically. So we've got 2 rules to go by. Do I need more rules to prove myself on this? Not really, because these are quick in and outs, right? Typically, I'm looking to run these only with meme coins. I'll tell you this. I don't have high expectations, massively high expectations for a lot of these, right? And so because I don't have massively high expectations for a lot of these, the reality is that this only applies to things like stocks and fundamental coins. For crypto, I specifically like this more because I feel like this is the safer route. with, or no, sorry, not with crypto, with meme coins. This is a safer route. So what do I mean by that specifically? What I mean by that specifically is I find more often than not, a lot of coins will settle after they end up finishing their daily time frame expectations of strength. So this is something I can really utilize, let alone, you've got, obviously volume and stuff like that you can utilize too. But I think with meme coins, it's a lot simpler. You don't have to think as much. We'll talk other coins, fundamental coins and stocks, which can get a little more complicated because there's more indicators involved with those. But I think with meme coins, you can really kind of stick to this 1, 2, 3 punch play right here. And you really don't have to do much more than that. So if I stick to this thesis, now keep in mind, there's one more thesis behind this. Price can still go higher with a lower RSI high. So it's a lower high is what we call that, right? LH. So what do I mean by that? Typically what you'll see is these coins meme coins specifically, will hit that 86 level and then they'll drop in strength, but price will still go higher, right? And then what you'll see is a lower high structure on strength, even though price has spiked really high. And really, you got to catch that second swing to really catch the full action, the price action. But your job is not to come in and try and catch every penny of the swing. Your job is to DCA out before or during, sorry, not before, during the swing. So we are looking to buy the accumulation phase and sell the pump phase. That's what we're looking to do. We're looking to buy the accumulation phase and sell the pump phase. And I'll show you that too. That's part of the thesis also. So we're back testing, and then we're coming up with a solution, and then we're figuring out a way out of the coin, right? We're doing all these things at once. So it's not about everybody's going to listen. It's not about, oh, everybody hold. Like, no. It's about understanding liquidity. That's what this is about. So RSI, no meme coin will exceed 96. Most meme coins don't exceed 86. Price can still go higher with lower RSI high. And we are looking to buy the accumulation phase and sell the pump phase. We're looking to sell into volume, right? We're looking to sell into the buy side volume. So now we'll kind of look through charts and we'll apply all these rules, right? So we'll apply these rules. So this one is starting high. Even though this hasn't hit its 86 phase, it's in a downtrend and it likely landed on the 50, right? So that's another rule we have to apply there too. I forgot to add that one. Sorry. So give me just a second. Above, and this one I typically teach to people, so I don't really think about it as much. Above the 50 on the RSI is bullish. Below the 50 on RSI is bearish. So these are all back-tested statements. Every one of them. All of them are back-tested statements. This right here is a well-known back-tested statement. All traders know this as far as RSI goes. This right here is something that I've learned over time while playing with meme coins. So again, I'm only applying meme coins at the moment, but we will be applying fundamental stocks and so on and so forth moving forward. So let's talk about it. And we'll talk about the accumulation phase, right? Typically, this right here. But let's move into another chart. So we'll move into Trench Coin, for instance, right? So hasn't hit its 86. And what do we notice here? Opened, got crushed, and is way undervalued. So went through an extended accumulation phase, pushed up to the high. You can see strength slowly starting to rise. And then you get a spike and you get a pull down. Not really a lot here in this chart to really go by on the thesis. So this is not a good chart to go off of. So typically we're looking for charts that we can play off of with this thesis. So let's come into not even that one. This one actually looks pretty good too, because it's kind of playing out of the low, but that's a different discussion than what we just talked about specifically. So let's get into, let's find an 86 coin. Actually, we'll look at Troll. Troll's a good one. So here's Troll. And we'll actually talk about many different ones that people have talked about this cycle. Nub, we'll talk about Troll, we'll talk about all the bigger players, right? All of them have shown this same indication. So Troll got the 90, 95, right? They got the 95 here. So remember the thesis I told you when I told you specifically when you get the lower high structure on strength, but the higher high structure on price. But your job is not to depict that this is going to occur. Your job is to depict that you need to start selling into price action, into volume. And if you get a big dip and you get more, then you sell more, right? That's your job. Your job is not to come in and over speculate or any of that shit. It's to come in and make money. So 96 right here. And then you play down on the lower high, pushing you into the 70. That pushes you higher into what we were just discussing. And basically from there, you get downside, 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 likely more downside, and you're down and to the right. Now, this doesn't mean the coin is cooked. It just means that you took profit at the right time, right? And then if you want to DCA back in, you can, but keep in mind, this is down and to the right. It's not necessarily negative. Now, what you see here from that point is that Troll gets cooked all the way to the low, right? Nearly to the 30, nearly to the 30. Doesn't quite make it there. But what we were targeting here on Troll is we were targeting previous low, right? So we're targeting anything in here, you could pretty much bid because that was your low end range right here. That was your low end range. And then from there, you had the big upspring. Now you've already hit that low end range again. You could hit it again, but anytime you're at this low end range, you're probably at a good place to DCA in if you were looking to get back into this coin. And then eventually you'll probably get another spike pushing you back out again. So perfect example right here with Nub. 86, actually you hit 95, which is exceeding most coins, by the way. And then you get the lower high into the higher high swing. You should have been out, and you would have profited, and everybody else would have been losing money. So from there, let's move into Nub, right? I think it's Nub. Yeah, Nubcat. So 3.1 mil liquidity. Let's run the RSI on the daily. Again, just multiple times of kind of peaking up here. But you can see right here, you hit 86 right here, lower high swing, higher high swing, and then roll. So right in here, you get this into this, and exactly what I talked about before, this into this. Boom. And you hit your target. You hit 86 on the nose right there. So that's your 86. This is your lower high, DCA and out all the way up. This is your buy pressure. This is your buy pressure. I know a lot of people, they have a hard time understanding buy pressure, but your buy pressure is whatever that spike is after the fact. Now, not every coin is going to get this scenario playing out, right? Some of them only get the 86 and then they roll. So that's why you got to kind of DCA out partially on the 86 and then leave your runner just in case they want to run it up higher. You're here to make money. You're not here to be like, oh, I'm going to turn this this $100 into $1 million. No, you're not. No, you're not. They're going to rinse you with that ideology. They're going to absolutely rinse you. So you have to be DCAing. You turn 100 into 500 here. You take out 200, let it run Oh, guess what? That 500 or that 300 that's remaining, that's now worth like 1500. You're at a lower high structure. Cut that shit. You have to cut the whole thing out, but you at least should be cutting something. So again, just another thesis got cooked exactly at 86, right? So this is exactly what I'm talking about here. It's 86, 86. I mean, really anything above the 80s can really be cooked, but 86 is the most consistent from what I've seen. Like if you got a really good cooking coin, 86 is that play. You're never going to get it off launch. Like a lot of people think that, oh, okay, well, how do you do that on launch? You don't. You don't do it on launch. Launch is just pure luck. I mean, here's the thing. You could probably run H4 on launch, right? And try and run it off that. And look, if we ran H4 on launch, and H4 is what I use if I'm trying to catch a launch, by the way. This is my launch thesis. H4 is the lowest time frame I like to run. You hit 86 right here. Let's see where price was under 86. I mean, you were relatively right here, right? So you would have cut your position here. Would you have missed some of this upside? Sure. But guess what? You're still not getting cucked and ending up all the way down here. I mean, you made profit at the end of the day. These meme coins, you just launch, let them run up, hit their 86 H4, run them. Just cut them. That's it. Like there's cut them, let them come back down, and then find that position to where you can catch the low end range right here, right? On the daily, catch the low end range and bid the lows. Right here's a 30. Right there's a 30. Both of those were bid ranges, and you would have caught a decent swing from those 30s. I mean, that's another 4,300% just from that swing alone. And again, you would have cut some here, and you would have cut the rest up here because you'd have been at the lower high structure on strength. This essentially is all back testing really is. I mean, let's do Fartcoin. Right, that was the space's like number one talked about coin. Everybody, Fartcoin. Guess what? Fartcoin. Guess what? Daily time frame. Guess what? 90. What heights did we say? 86 to 96. Right? They hit 90 right here, rolled, and then ran. Right now, granted, you'd be like, well, if you didn't hold for this, most people didn't sell up here. Most people didn't sell. DCA out, higher, DCA out, higher, DCA out, higher, DCA out. You got to take profits along the way. And here's the thing. If you waited for this lower high structure, you would have been selling here. And even if you would have cut that whole position, by the time this thing was done, you would have still been buying lower. You'd have still been buying lower. So what would be the issue there? Again, just stick to the thesis, right? It's 86 to 96. That's the thesis for meme coins across the board. You can pick whatever, give whatever, whatever meme coin you want to give. Let's run Pepe. Where's the high liquidity Pepe? Where are you at? Right here. Again, 93. 93 right here. Lower high structure here. You can't make this up, man. Look at this. Lower high structure here. 93. Higher high here. That was the high. That was the high. And then you got a pull back down into here. And then they ran it all the way back up to here, right? And what did they do? 89. 89. And then look. Lower high structure, higher high structure. Every single time. So, I mean, same thing right here. You hit basically 85, right? And then what did it do? Came down, come down, come down, come down. you're getting lower and lower and lower and lower. And eventually price will spring off of this. But the point being is that back test, back test, back test, back test, coin after coin after coin after coin after coin, I pulled up. And it works. It works every time. There's almost no time that this thesis won't work. And really what you should be doing if you're buying things, you should not be buying into the pump. You should be buying the accumulation, right? If price is coming down, you should be buying the accumulation. But a lot of people, what they do is they don't bid here on the coin. They wait until they see this kind of crap, and then they let everybody get hyped. They get trapped, and then they try and tell everybody, oh yeah, bid. And they think that they're going to get all this move on this next move, and they get a 3x here, whereas these people are up hundreds of X's. And then they get upset because they didn't round trip that all the way back to their entry, or lower, sometimes lower, right? This all depends. So you got to be careful with a lot of this. But back testing is being able to go from one asset to another asset to another asset to another asset and apply the same rule and get the same result. That's what it is. That's all it is. And if you can do that, you can do TA. You can literally do TA. Because once you get enough back tests that can give you successful trades, then at that point you're in the money. You're a good trader at that point. You need good back tests that give you successful trades. Now, we talked about meme coins quite a bit. I've went through many of the majors that a lot of people have discussed in the past. And I've given you kind of theses behind like how you can utilize this to be able to kind of get in and out of these. And I do have lower time frame plays and some of that too. I'm not going to reveal all of my secrets, but I'll reveal a lot. So on the meme coin side, I still got some cards up my hand, but we're gonna hold on to those. With stocks, it's actually not as hard as people think it is. Like this has been the easiest play in the world, really. In stocks, like it's everybody's always freaking out, but all you got to do is kind of measure your strength to your RSI. I mean, to your RSI to your stochastic. Now, with this one, it doesn't really apply as much. I mean, granted, yes, 80 to 90 is really high on strength, right? And anytime you get in those ranges on any asset across the board, I don't give a shit. Tesla, I don't care if it's whatever, unless it's the SPY, unless it's SPX. In which case, I think even that would get crushed at some point, being that high. I think you should realistically look at rotating, to something that makes more sense when you start getting to those levels of bot. A lot of people get in this mindset that things can go up forever, and they never do. They never. Now, what I mean by that is not long term. I mean like short term, right? Like 1 year, 2 years, stuff like that. You can trade in and out of those assets continuously, and range trade them and many other things. Like I'll give you Tesla, for instance. Tesla's a great one. So like you could have bought Tesla here, rode it up, but then you would have just been sideways for like, multiple years. I mean, you ran basically from 2013 all the way up to 2019 before you got your next leg. 5 years. You just ranged sideways for 5 years. No real profitability. You got the profit here, but 5 years, and then you finally got a breakout. And now you're looking like you might get a breakout. Yeah, SPY, that's what I was saying, man. SPY is one of those nasty ones, man. It just never stops. But outside of SPY, I can say this about most other stocks. So, again, you just kind of float. Now, for me, I have different rules for stocks than I have for, like, meme coins, right? So, my rules for stocks is two different rules. I like a few of them. Usually these breakouts kind of occur, in these spikes. So you can see your high volume spike, again, high volume spike. And then if you look over here again, now we're kind of breaking down on volume. So anytime you kind of break down, and then same thing here, Like you had this breakdown of volume, but that's while you're kind of generating up. And now we're kind of like high volume spike here and then broke down. And now we're kind of breaking down as we're breaking out. So nothing too crazy here. I don't think the cycle is going to be stupid crazy until you get to a point to where you really squeeze. Or you can kind of break out of this range. So it's going to be one or the other here. But volume is kind of a dictator in some ways, but not as much as everything else. So stock is a good indicator against my RSI. So I use stock to measure RSI. These are the ways I set up my rules. And if stock is high and RSI is high, then market is high, right? That's the way I look at it. So you can see right here, stock and RSI are high together right through here. So high together, and you get the lower high structure. So because stock and RSI are high here, we're likely getting near a top, and we were. That's why we remained sideways for quite some time. And then anytime you get down to previous low, which is what I was looking for, you can see right here, I already identified it. You had your previous low here, and you had your second low here. This, for me, is what we call like a double bottom, right, on strength. So likely your bottom is set here. So your bottom market is set here. So these are different rules that I apply when I'm looking at things. I like to see, does strength match in a range? If strength matches in a range, then in that scenario, we're likely at a bottom of market in that scenario. And it looked like we are, and it looks like we are. And then what have we seen since then? We've seen breakout 2. Now you got this top right here that's kind of been playing. And so this right here for me is saying that we still have room from a strength perspective, but it also doesn't mean that we can't chop, right? So for me, Tesla is bullish until Tesla gets to these levels. So from a strength perspective, if we can get up to these levels, then my rule of thumb, my thought process is here is that we go ahead and we cut the position at these highs and we move into something else. If we're at these levels, my thought process is on any asset, look at it across the board, see if it makes sense to be buying. Same thing with like when we were looking at Carvana, right? So great indicator right here, high volume spike at the low. This is a rule too. This is a really big rule that I utilize consistently. High volume spike at the lows, really good indicator that you're probably bottomed. High volume spike at the low, right down here, and then reversal. I'm going to show you Bitcoin. Same thing right here. Look, Bitcoin bottom. High volume spike at the low, right? On top of a bull div, and then you reversal. Same thing with topping patterns. High volume spike at the high, right? At the high, and then you eventually reversal. So high and low spikes are big indications of price action. It's much better on the weekly though. I like the weekly spikes better because they're cleaner. You can see right here, really heavy spike right here. And if you would have bought this spike was as high as your sell-off spike up here. That reversed the market back up. So your sell-off spike here matches this spike. This spike was actually more aggressive than this spike. It was actually higher. So because you had those high spikes in these ranges, it was kind of a good indication that you were topped here, right? Somewhere's in here. And then you were bottomed somewhere's in here. Spike, spike, spike right there. And then same thing over here. You were basically dead on volume until you got to this point. See how volume just died? And then big spike right in here. And that was your reversal market. Then you came back down again and you spiked the second time. Again, just reversal market. And then you spiked at the highs, right? Indicating that you were likely going to come back and roll. And now all we've seen with Bitcoin since then, no spikes. So because we've seen no spikes, This is why I've been bullish on the market. There's been no true sell-off of the market. There's been no true buy-up of the market. There's not an over, too much indulging or a gluttonous market. It's not a gluttonous market. I'll put it that way. Because like a lot of people think that markets are depicted on, had they been hot for X amount of time. What matters with markets, and I'm going to tell you guys this because this is really important to understand, is has a market been frothy or not frothy? What defines froth? Up and to the right does not define froth. God candles and volume define froth. That is what defines froth. And you need both. If the volume doesn't match the God candle, then it's not as strong as you think it is. Volume will 100% depict strength. This is a ridiculously crazy volume candle at the low. This is a ridiculously crazy volume candle at the low. And this was a ridiculously crazy volume candle as it was falling. So you got heavy volume, heavy volume, heavy volume, indicating you're likely bottoming. That's how you can tell. We have no high-end volume candles up here. No volume candles at the highs. None. No sell-offs in the buy-ups, nothing. It's just trading as usual, right? Business as usual. That's why the market keeps going up. Because there's no froth in this market. It's floating. Just floating. And until we get froth, the shit's going to keep floating. It seems insane, I get it, but that's how trading works. You need some kind of indication that an event has changed the threshold of the market. And you can see here, volume is dropping so low right now on Bitcoin that eventually you're going to get a spike. You're going to get a spike. And that spike's going to be up and aggressive. And when that spike comes, you're going to probably be really frothy. And then you'll start seeing rotational liquidity. That's where you'll start to see money move from Bitcoin to other assets. That's where the froth will start to set in. That's why I'm still bullish on risk. Because it only makes sense to be in risk before the risk runs. You cannot chase risk. Once risk runs, you're already screwed. You can't get the position. You do never. The craziest thing you can do as an investor or as a trader is try and chase risk. Never chase risk. Front run it, play it before it runs, never chase it. So with that being said, again, just different indications, different rules, different things that you can utilize to be able to kind of create your own strategy. Not to mention, hold on 1 second, sorry. Not to mention the back testing and stuff like that we've been discussing. So these are different ways to back test. This is what back testing is. Back testing is proofing, right? It's coming in and being able to show your work. It's not sitting here saying I back tested. Show your work. If you say you back tested, show your work. And you can lie to all the people online all you want, but the reality is if you want to make money, don't lie to people. Create a strategy with real back testing. Create a strategy with real thought put into it. And if you can do that, if you can back test, you can trade. You 100% can trade if you can back test. And that's why paper trading exists. Paper trading exists to do back testing. And then once you find your back testing works, then you go into money trading. And that's how you get good at trading. But you need to create these rules. You need to create this back testing rules to be able to have a strategy, to be able to actually make it in this market. Stop getting fleeced by these people pumping tickers, man. They throw out a ticker and you just jump. Just stop. Just do what I'm not going to tell you what to do, what I'm telling you financially, but do your due diligence, right? Read a book, understand candlesticks, back test. Back test what you're using. If it doesn't work, it doesn't work. Don't force it. Never force a back test. Play with what the market gives you. If the back test works, you'll know. If it doesn't work, look for something else. But I just gave you guys a few things that you can use to back test yourself. All you got to do is put them on paper. That's it. These are my strategies, but you could use them. You can use them. But the only way a back test works is if you trust it. And the only way you'll trust it is if you've done it yourself. So you can't borrow somebody else's back test. You can't borrow somebody else's conviction. But if you can back test it yourself and it starts to work for you, then that right there will give you the confidence to be able to come in and trade the markets correctly. With that being said, I feel like I've covered it. And I look, here's the thing. I'm going to tell you guys this before I end it. I could have went and chat GPT'd and done up this whole, bullshit and talked it up like most people do, because people like to throw in fancy words. And when I say fancy words, I'm not mean like literacy, obviously, right? But I mean, like, people like to talk up, what they can do and what they can't do, but they can't prove it on paper. They can't show you what it means. They'll go and they'll Google it and they'll tell you what Google tells them or what the AI tells them or whatever. And they'll just literally just regurgitate whatever they're being told with no understanding of what it means. I'm showing you what it means. So I'm trying to show you guys, like, this is what you have to do. If you want to trade markets, you have to back test. You have to understand liquidity. You have to understand volume spikes. You understand those things, it makes things much easier for you as an investor or as a trader, either one. Even when investing, you can get optimal investing levels if you're paying attention to volume spikes in the drops, volume spikes in the pumps. Are we overheated on strength? Are we oversold on strength? That's all it is. And again, you can use other tools if you want to. If you want to use MACD, use MACD. If you want to use MAs, use MAs. I'm not telling you the right or wrong way to do this. What I'm telling you is like, back test whatever you're doing, make sure it works, and don't BS. Don't BS, right? Hold yourself accountable. If that shit don't work, find something else. If MAs aren't working for you, move on to RSI. If RSI is not working for you, move to stock. Stock's not working for you, move to MACD. But try and find something that works for you. That's the best way you're going to be able to make it. I'm consistently trying to tell people different ways and trying to teach people different ways to make it in these markets, because I can't stand the predatoriness of this market. It's super predatory. The people in it are very predatory. And, the only way to succeed is have more successful people. So hopefully I helped at least a few of you out there. Hopefully other ones will kind of take into what I'm saying and utilize that information. But I'm going to kind of end it there. I hope everybody appreciated this stream. And we'll be doing this again, maybe next week. We'll see. Again, thank you, everybody. And I'll see you guys next time.